What's going on, everybody? Julian here from J. Lewis Trading. I'm going to be hosting this pop-up webinar tonight. I've never done one of these. I mean, I host webinars all the time for our members, but I haven't done one of these random pop-ups. What's going on, Matt? Just going to do a quick visual and audio. Can you see my screens? Can you hear me all right? There's a chat box there. Right on, guys. We got a number of our members in the house tonight. Always love it when you guys come through and support me. Just to the members, just so you guys already know off the top, if you check out now, it's all good. You guys specifically are not going to miss anything. This is some super poignant, straight to the point type stuff that I want to talk to the people about with respects to one of our strategies. And so you guys aren't going to really miss anything if you all check out right now. But feel free to stick around. I think we're going to do maybe 30, 45 minutes tops. We'll save any questions for the end. And essentially, we're talking about four main things here that make up a trading strategy. And when I'm done talking about this stuff, and I'm going to give you some examples, we can do a little bit of Q&A at the end. I want to assure you that tonight there is absolutely 100% nothing for sale. This is not a sales call. You can buy whatever you want. I don't care, but this is not a sales call. Matt, all good. I appreciate you coming through, man. I'll see you in the morning. Matt's one of our members, so I just wanted to give him the heads up. So there's nothing for sale tonight. I'm not putting anything out there. I mean, there's the option to connect with us, but I'll give you that option later. Again, nothing for sale tonight. This is not a sales call. There's no upsell here. What we're doing is I'm going to be moving into a very simple structured breakdown of one of our core strategies. And then I am going to forward everybody here a link. Again, there is zero sales here. And what the link is, you're going to have to connect with the link and then give me your email address and your name that you want me to send you a recorded version of the Trader Rehab Clinic to. So what the Trader Rehab Clinic is, just so you know, is I want to say it's about 3 or 4 hours long, but it's recorded content from a prior workshop that I held, which was paid, by the way. And so I recorded everything, and then I packed in some more valuable content in there for you guys. And I'm going to be giving it to you 100% free, F-R-E-E. It is completely 100% free. So at the end, there's a little chat box there, and I'm going to just simply pop a link in there, and you're going to want to connect with the link, go through. There's a little questionnaire. Fill out the questionnaire and then email it to me. And what I will do is tonight, as late as tomorrow morning, I will add all of your names to the Trader Rehab file we got, and I will manually send that out to you. And again, there's content in there that is going to go into detail with what we're talking about tonight. 100% free. The only thing is, part of the Trader Rehab Clinic, I do talk about the specific charting platform that I use, which you see right through here in front of you. It is TC2000. There is a link to go and subscribe with them if you want to. Totally your choice. You do not have to, but to make or to take advantage of the scans that I'm going to give you and the charting setup that I'm going to be going through in the Trader Rehab, you might want to look at that. There's a discounted model in there if you go through the link that I send you. Again, totally optional, nothing for sale here, guys. This is about wanting to give you some structured approach to trading, and I want to break down some secrets that a lot of people on webinars aren't giving you. So I know that tons of you have probably been on webinars, been in these types of situations, and people in my position are giving you very little, but just enough that you're curious and then leads to buying something. That is not what we're doing here. So that is my entire segue. Now that we've got what looks to be like virtually everybody that has signed up, and I screwed up, by the way. I wanted to keep this to no more than 50 people, and we have got way more than that. So I'll apologize for the Q&A at the end if it gets a little bit busy. Again, we're not going to keep this, I'm not going to do this too long. I want to go over everything front to back. So I'm gonna get started right here, right now. If anything comes up question-wise, let's save it for the very, very end. Maybe I'll pause for about 30 seconds. If you want to open a Word document, a Google Doc, if you have pen and paper that you want to take some notes on, this would be a good time to get it, or a doc in your phone if you want, but something to make a note of the 4 components that we're going to be talking about tonight. And then there's I think there's a little bit more in the actual trader rehab that I go into with detail. But these things that we're talking about tonight, these are some of the core secrets to trading successfully that we're going to talk about. First and foremost, I'm going to start off with scanning. Why we scan, the importance of it, and the point of it. Now, I'm not going to go over the scanning profile as in the inputs, because in the trader rehab course that you're getting for free, the scanning inputs are in there, okay? So we're going to talk about scanning. We're going to talk about stock picking. And so I'm just going to get straight to the goods on once we scan and we've got our inputs out in the market bringing us opportunities, which one do we want to pick and why? I'm going to go over that. Then I'm going to go over, once we've scanned and picked the stock that we like, how do we use pattern recognition to get into a high probability setup, okay? And one thing that you might not hear about a lot out there, and this is something of importance that I wanted to talk about specifically, is there's pattern recognition, and we're talking about patterns, triangles, flags, head and shoulders, you know, to name a few. I've got the charting encyclopedia. I think there's over a few hundred patterns in there, cups and handles, these types of things. There's a big difference between a high probability pattern on price action versus a high probability price action pattern where there are also indicators that are also setting up and adding to the pattern profile. So I want to go over the difference, okay? I want to go over execution. Execution is kind of broken down into 3 parts. It's where we're getting in and where we're getting out if we're wrong and where we're getting out if we're right. I'll tell you this right now, make a note of it. You want to know every aspect of your trade before you hit the buy button if you're going long, or before you hit the sell button if you're going short, or before you hit the buy button if you're going long or short on an options position. Everything we're going to be talking about is going to be about scanning, stock picking, patterns, and execution. And this can be applied to equities or it can be applied to options. And then what I'll also do is I'll actually show you some of the trades that I specialize in, and I'll give you 2 sort of breakdowns of what I did today. And I'm going to try and do all of that in about 40 minutes. So what we're going to do is we're just going to move over to a screen that I got set up, which mimics a lot of what I do every single day and what I'm looking at. But what you've got right through here is you've got obviously your price action chart, and then over here you've got your scan. So again, we're not going to get into the scanning inputs because once you get the trader rehab content, the scanning inputs are in there. I'm using TC2000 as a charting platform. I've been using it for probably almost 10 years. I swear by it. That's just me. Some people don't like it. I love it. Super user friendly. And all of the scans that I have built are for TC2000. So to really get great use out of what you're going to get later on tonight, you might want to think about making the small investment into getting TC2000. I'm not entirely sure what the cost is. There are links for all of this stuff in the trader rehab. So we've got price action pattern right through here, the chart, right? And this is where we perform our technical analysis. And then over here, we've got our scans, okay? So first and foremost, big question, why do we scan? This is a question. Why do we scan? I think there's a bigger and better question to even start with, and that is, what are we trading? This is a big thing. People will say, well, I trade equities, I trade options, I trade crypto, I trade bonds, I trade commodities. Okay, that is a specific market, but in those markets, there's sort of a sub-market that you're trading. And then within that sub-market, we want to understand what it is we're trading. So trading is obviously different than investing. You've got day trading and swing trading. We're talking about day trading specifically, and there's one thing that we're actually trading, and it's not stocks, it's not options, it's not crypto, it's not commodities or bonds. What we're trading is volatility. Volatility is an intangible that finds a host, which is a symbol, like in this case, ANY. Volatility sort of starts around this trough right through here, and you can see that this thing swings all the way up 224%. So this move from here to here is what is referred to as volatility. It's an intangible thing that finds itself into a stock, and the stock moves based on volatility. Volatility is a rapid move up, it's a rapid move down. There's a lot of demand profile, there's a lot of selling profile, but it is that intangible that is taking a stock from, you know, the lobby to the penthouse, and then from the penthouse back down to the lobby. It's that thing that fuels movement. So it's super important to understand that as a trader, you're not trading stocks. You're looking for volatility, which is that intangible, and then the stock that you're looking at, in this case, ANY, is simply just a host of volatility. And then once you've pinpointed the host of volatility, you then want to ask yourself, how do I personally take advantage of it? So in the case of ANY, just because I'm here, I'm going to show you there's an opportunity here, there's an opportunity here to get long, and I'm essentially looking at trendline resistance breaking out into structured levels. We get another pullback, we've got a moving average that holds, and then right through here, this thing's a rocket ship, 80% to the upside. What does it do after that? It finds itself coming all the way down. Old saying, today's movers, tomorrow's losers. And you can see that it's kind of floated sideways and consolidated in a range, which is suggesting that the volatility now is gone. Okay, so the big thing here is that we use a scanner or a screener, interchangeable words, for one reason, and that is to pinpoint volatility. I just want to put this out there. I think the 10-year average on the S&P 500 is somewhere between 9 and 12% per year. So 9 and 12%. We typically don't look at anything that isn't moving up at least or down at least 20% a day. So you can actually see here through here at the top end of our market that we were trading today on our scan that, you know, 53% ish, I'm rounding up 40%, and we've got opportunities all the way down to AMPE 21%. There's a lot of movement. Flip this upside down. On the short side, we're down 30%, 18%, 15, 15, 13, 12, 12, all the way down to, well, I guess we wouldn't even trade in this range. We'd be looking at this stock right through here. Something that we have to look at in terms of volatility has to be plus or minus 20%. That's what we look at. And a scanner / screener, same thing. What it does is it helps us pinpoint that volatility. So the reason why we use a scanner is to pinpoint volatility. Once we find that volatility, we then want to hammer the chart and look at the chart and see where the opportunities are. So for example, let's just say that it's I'm on the West Coast. So for me, I'm usually in front of my computer somewhere between 5 and 5:30 a.m. When I'm looking at this scanner between 5 and 5:30 a.m., these are going to be the opportunities that I'm looking at. And then the big thing is that I want to understand why these stocks are moving. And the way that I do that is I go to the scanner and I'm looking for these higher percent gainers on volume, and then I cross-reference that with news. News catalysts are great because it gives me insight as to why or what is creating that volatility. But at the end of the day, I don't care about news because price action is going to do what it wants either way. And my job as a trader is to stay directionally neutral and just look at the opportunity, whether it's long or short, because volatility on a big percent gain is going to express itself on either side of the trade, long or short. And as a trader, I just take advantage of whatever opportunity is given to me. Does that make sense? So it's 5:30 in the morning. Market's going to open in an hour. I want to start looking through some of this stuff. I can tell you right now that this pure consolidative move through here after this massive uptick is absolutely nothing more than probably some sort of acquisition or buyout or offering or something to that effect. Nothing here for me to look at. I have to move down the line. This is going to be a later dated move, so I'm not going to talk about this one, but we do get into this one, INDP. This was something that we were talking about today in chat, and our members, not me, but our members were trading this, and they were having a great, there's a lot of communication in our room today about this particular stock. And so again, with the scanner is the thing that works for us. We employ this scanner to go out and find us volatile situations. Once we pinpoint something, like in the case of INDP, we then want to fall back and say, this is something that I want to trade. So this is where we start to transition in from scanning to stock picking. So now that we've scanned for volatility, we've actually got something that we can sink our teeth into. And the news is going to help us sort of give us some insight as to whether or not this thing is going to potentially move. If there's positive news or positive catalyst, this thing very well could bump. And you can see, again, this thing's up 40% today. It's up 40% today. Keep in mind, the S&P 500 on average moves up anywhere from 9 to 12% per year. This is moving up 41% today. That's volatility. That's what we're looking for. So now that we've picked our stock and we see the fact that, okay, well, this thing is a potential mover, now the question is, how do we take advantage of it? And this is where we now transition into patterns, pattern recognition. So there are, again, most people are going to tell you patterns are flags, whether they're bullish or bearish. They're triangles. And when you find a triangle, you want to sort of look at what the lead-in trend is. I agree with all of that. That's fantastic information, but it's pretty baseline information. So I think it's fair to say that most people, even people with not a lot of experience, understand what patterns are and understands generally what pattern recognition is. So kudos. The fact of the matter is that you want to you've probably heard too that you really want to stack the probabilities in your favor. And a great way to do that is to look at patterns on patterns. And what I mean is, when you get a price action pattern, like we've got right through here, this would be called a bull flag. And this is a pre-market bull flag. You can see that we've got a symmetrical triangle. We've got a bullish lead-in trend. This is very much a high probability pattern. So that's one part. It's a high probability price action pattern. Awesome. But there are also other indicator-based components to this that are also producing a pattern. Where's that pattern? It's right through here. It's moving average and it is VWAP centric, okay? So now what we've got is we've got a high probability price action pattern, but we've also overlaid that with the fact that this high probability price action pattern is stacked on top of a very important 200-day simple moving average. And also for institutional based trading purposes, it's also structured itself above the VWAP part of the story. So when somebody says, look at high probability patterns like a flag or a triangle or a fill in the blank favorite pattern, do that, but overlay it with moving average indicator based patterns as well. Also, MACD, I'm a big proponent of the MACD, and you can see right through here that the MACD is offering you a buy signal. This is part of the pattern. If we look right through here, this is volume. This equates to participation. So now what we have is we have a high probability price action pattern overlaid by a high probability indicator-based pattern, 200-day simple moving average, VWAP for institutional buyers, and then we've also got a buy signal on the MACD, and we've got a shit ton of volume that's coming through. Those things collectively are as about a high probability pattern that you could ask for. There is a much greater chance that that is going to be a rock star setup than just a bull flag. Because I'll tell you something, if you're trading a bull flag below the 200-day simple moving average, you are screwed. It's just that simple. You want to be trading high probability patterns in the direction of the prevailing trend where you've got these other structured pieces of the pattern all printing. Hope that makes sense. So what we've done here is now we've looked at scanning, we've looked at stock picking, we've looked at patterns. Now the thing here is we want to get into one of these patterns and we want to use a precision-based entry model, okay? So there are a couple ways to do this. Me personally, I'm not the one that is going to take the breakout trade of the pattern. Breakout trades are a very, very well-known way to get into patterns. And because it's a well-known, well-played entry, you'll often find that when you get into a high probability breakout trade, it'll be what's, in a lot of cases, it can transition into a fake out breakout. And what a fake out breakout is the breakout like this, for example, breaks long, tons of orders are filled, and then all of a sudden there's a collapse and sell off. That's a fake out breakout. So for me, I want proof, okay? It's one thing to scan, it's one thing to stock pick, it's one thing to have a high probability pattern, holistic pattern, but it's another thing to actually get into the play. And the execution portion of things is the most important because you're at the last step of the process. This is where the trade actually starts. So for me, in a lot of cases, what I want to see is I want to see the actual pattern breakout. I want to see it prove itself, and then I want to see it pull back. And then as the momentum continues, I want to get long past that level. So it puts in a high, it pulls back, and then I want to see that continuation after the fact. In the case of INDP, this is what you're seeing, okay? Does that make sense? So what we're going to do here is we're going to back this up. And again, I go over all of this stuff a lot slower and a lot more detailed in the Trader Rehab Clinic that you're going to get free later. But I want to show you that if we were to get long up through here, okay, and use this area as proof of a pullback and then continued momentum at 1488, and we get long, we're then going to use our profit target taking tool, which is better known as the Fibonacci projection tool and projection levels. And essentially it's using high probability Fibonacci math sequence to give us ideas as to where this could run. And if you actually pull this down, you'll see that these numbers are infinite and ongoing. What we like to do is we like to structure trades out at the 618, and we like to trade into that level. And when we're trading a breakout level, in a lot of cases, we'll use the VWAP low as our area to protect our trade if we're wrong. So in the case of this particular situation, this is your risk profile, and this is your reward profile. Okay, so now what we've done is we've used our scanner, we've picked a stock, we've used a high probability setup, and then we've used our execution tool, profit target taking tool, to give us some insight as to where price action is going to go. And what we want to do is once we understand where price action could go, we want to use that as a fixed profit target. If price action gets through it, holds, tests, and moves on, it becomes your new stop loss. If price action gets up to that level and then comes back into the range, you kind of want to think about pissing off. Now you can see that INDP right through here actually flags a little bit. Question is, does it move higher? It absolutely does. Where does it move to? To a high probability profit target taking area like clockwork. You'll see that when it pulls back, it also holds a high probability level, which is known as the 382. And these are the levels that we follow on a regular basis. Also, it's no surprise that it reached this level, which is a high probability profit target taking level, but you'll see that it rolls over right through here and has some problems because the momentum on the move is starting to fade, okay? And these are all things that we have to think about when we're looking at trades. This is what I do every single day, primarily on the short side. This is what our traders do on a very regular basis every single day when they're trading, and they're using these same tools, the same structure, the same model, the same everything, okay? So scanning is step one. Got to go to market and ask the market, what are you doing by the way of volatility? Excuse me. Once we've found a host of volatile stocks, which are going to be these, we then want to look at something that is above 20+%. What does that mean exactly? Well, I'm looking at AMPE as the last stock on the list that I'd look. This, unless it crossed the threshold of 20%, I don't care, and I don't care about anything else unless I want to flip this upside down and start to short. But for the purpose of this particular webinar, we're just going to talk about longs. And okay, so we got the scanning, this is stock picking, and then we got the pattern recognition side of things. Pattern is very, very important. We're looking at high probability patterns, but we're looking at high probability patterns that are on top of high probability, well-known indicators. The 200-day simple moving average, along with the 50-day simple moving average on the S&P 500, are king. Nobody can deny that. Nobody can deny that those are massive areas of interest. Those are massive areas of interest when it comes to big / smart money, institutions, funds, pension funds, hedge funds, so on and so forth. Huge, huge areas of interest. On the lower time frames for day traders, they're also really big levels of interest. For the sake of what we do, what I do, what our team does, we want to know that price action is over the 200-day simple moving average, which means it is net bullish. And so we only want to look for long opportunities. As long as price action is over the 200-day simple moving average, we only want to look for long opportunities. Long opportunities mean we want to buy at point A, say right here, boom, and sell at point B, boom. Buy low-ish, sell high-er, okay? 200-day simple moving average, simple rule to follow. If price action is above the 200-day simple moving average on any time frame that you focus on, you're long only. If price action is reversed and it is under the 200-day simple moving average, you're short biased in that situation. Don't fuck that up, please. If you are above the 200-day simple moving average and you're not a reversion to the mean trader, just stay long. Flip that upside down, vice versa to the short side. Don't go short. Just don't do the opposite, okay? So just understand that wherever the 200-day simple moving average is, where's price action? You up above it, or are you below it? If you're above, you're long, period. No questions asked. Now, the next step to that pattern is that you want to make sure that the VWAP is over the 200-day simple moving average. Now, for the retail traders that play in the, small cap arena, stocks that are maybe in the Russell 2000, for example, that's the small cap indice. Stocks that are priced between $1 and $15. I'm not talking about penny stocks or stocks that are sub $1. I'm talking about lower cap, nano cap stocks, small cap, nano cap stocks that are priced in that $1 to sort of $10 to $15 area. The VWAP is of the utmost importance because that's where funds will come in. And if they are partially invested in, say, a biotechnology stock that just got phase 2 approval, for example, they have a very simple model. Let me get a million shares at the VWAP. And so what we want to do is we want to understand what institutions are doing, what market makers are doing, and they love the VWAP. So if they love trading around the VWAP, we need to get on board and understand that that is where we also want to be trading. So again, another rule here that I practice, 200-day simple moving average, price action's above it, you're long. VWAP has to be over the 200. It has to be layered this way. And then some people use the 20 instead of the VWAP. Some people use a 9-day or a 13-day EMA for whatever reason. I like the VWAP because this gives me some insight as to where institution / big money might be playing. Right at the VWAP or approximately just off of the VWAP. This is not a bad area to look to get long once this consolidative little situation bumps here. And you can see even right through here that this is considered a high probability trade as well. So if you looked at this in the cash market and just went like this, you will see that price action breaks out into the 618, a high probability pattern. So if you didn't take this trade and you waited for that first major pullback, look where it starts to really break out and get amped up, and look where it runs to. Super important stuff. Scanning, stock picking, high probability patterns, looking for patterns on patterns, 200-day VWAP, flag pattern, looking for that turn. We then get into, you know, almost a ascending triangle, if you will, and then this thing squeezes the breakout and turns. Although for dip buying purposes, you would probably want to trade the reversal of this candle. Consolidate, 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 boom. And you'll also note that the volume is above average, okay? That's a key area to get long. And this is another thing that we talk about in some of our more advanced course material, which we're not talking about tonight. But that gives you, you know, a different look into how to get into these trades. So this is the way that we execute on trades, okay? So the again, I just want to recap this stuff. And the big question again is, why do we scan? We scan for these opportunities. We're looking for opportunities to play volatility. It's just that simple. The scan finds volatility, and volatility is generally something that is 20% plus to the upside. And then we want to understand or ask the question, can we get into these? Can we get ourselves into a situation where we take advantage of that volatility? And that's all the scanner is for. It's to find volatility. I cannot stress this enough. I don't trade stocks. I trade volatility. Stocks are merely the host of the volatility, okay? Percentage movers, okay? Plus 20%, we covered that. I go over this in the stuff you're gonna get later on. And then I also have to layer on top of that above average volume. You'll see that it says above average volume here. And so you can see these checks all indicate that every single one of these plays is exhibiting higher than average volume. What does that mean? In short, that means that for whatever reason, today, there's demand, and more demand today than any other average day. So when price action is moving on above average volume, that is telling you that there is above average demand. Volume equates to participation. If there's a lot of buying, there's a lot of demand. If there's a lot of selling, there's a lot of distribution, meaning that people don't want the stock for one reason or another. Generally fear-based, again, psychological stuff, different conversation, but we want to look at volatility where there is an uptick in demand, okay? Stock picking, again, it's just about tracking demand. And the big thing here, simple fact, simple equation, you know, and you might want to write this down. Again, looking at volume and above average volume equates to demand. And when you do this very simple equation that I'm going to give you, it will help you understand what trading is really about. Demand plus demand equals higher prices. It's just that simple. If you look at demand plus demand plus demand in these areas right through here, which is where that demand starts, right? Demand, 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 it equates to higher prices. 70% move from this point to this point. Demand plus demand plus demand equals higher prices. Super important to understand that. If we were talking about short trading and people are letting go of stocks and they're selling, supply minus supply, or I guess it would be supply plus supply, that equates to zero demand. Zero demand, price action starts to float lower until it finds a value added position where some investor decides that, okay, this is actually a cheap spot. Now I'm going to get long, hence a bounce. Does that make sense? Key components of picking a stock. Again, we need volatility. We need to understand the volume because that's where the demand is. And we need to understand how to take a very calculated approach. Let's look at another one. Calculated approach in this case would be that price action is just sort of floating sideways. But if you look at this stock, you're seeing the pattern that we need to see. And what that pattern is that price action runs up out of the gate, it pulls back, it's giving us a high probability setup, This is what's referred to as a flag, a bull flag. Okay, key components, VWAP, 200-day, momentum's upticking, volume steps in. That's demand. So I'm going to go over this a few more times because I really need you to understand that stock picking and trading is not rocket science. There is zero need to overcomplicate this stuff. The only thing is that we have to practice patience to look for that one thing that works out 6 to 7 times out of 10, which equates to a 60 to 70% trading success ratio. And once you find that one thing that works, you are good. Linda Raschke, female trader, well-known boss. She has famously said over and over and over again, all you need is one pattern to make a living at trading. I've just shown you one pattern, 2 different charts. Same thing. If we look at how to manage some profit taking or target levels, we're just going to use our Fibonacci projection tool. We're going to go straight up to the 100 level, and there it is. You hit your target. You're dip buying right through here on the breakout. Your VWAP is going to be your stop level right through here. Your entrance is going to be somewhere in, let's call it this area right through here. And so now what we're looking at is your risk, 10 cents. And your reward is going to be, what is that, about 35 cents, I think? Yeah, 25 to 5 is, yeah, 35 cents. Right, so you're looking at 3.5x the upside to downside. That's a good trade. If you can trade 60 to 70% of the time to the upside, even with a 50%, if you're trading 60 to 70% ratio with even a 2-to-1 risk to reward, reward to risk, you are a consistent trader, not rocket science. We just have to look for that same pattern, do the same thing over and over and over again, and it starts with the scan. Why? We need the volatility. Once we locate the volatility, now it's about which stock are we going to look at. Once we track a stock that we like, that is at least 20% up, 20% positive for the morning on above average volume, we then want to start to look at these patterns. And then once we find a pattern, then we want to ask, how do we execute on getting into the pattern? Pattern recognition components, it's a price action pattern and it's the indicator pattern collectively together, right? Bull flag is great, but a bull flag over the 200 over the VWAP with a MACD histogram or a MACD by itself giving us a buy signal where volume is stepping up that's it, it's killer. That's what you're looking for. We've talked about the entries, we've talked about the targets, and this is just how we execute on these trades. Let's look at ATNM. Again, same thing. You're getting the same sort of pattern breaking down. The big thing that I like is I like to see that initial push. I like to see the pullback. I like to see the hold of the VWAP, which we get right through here. And what are we saying here? Over the VWAP, over the 200, buy signal on the MAC, demand plus demand plus demand, right? You're seeing a lot of buying volume coming in. What's buying volume? It's demand. When you buy something, you want it. You see that shirt you want, you buy it. That's the demand. There's a demand for that shirt. Those sneakers, those shoes, those loafers, that car, that trip, that boat, that this, that, it's all demand. This is demand right through here. And it's no surprise that this thing upticks hard and then moves even harder into the close. Rest assured that if we mark off the swing low to swing high, I can assure you that this moves into a high probability situation. Look at that. You would probably honestly have to look at the 50 right here because of the where we're closing. Or if you swung this and you targeted out to the 100, you would have hit that. Now the big thing is, does it gap in your favor tomorrow morning? Don't know. But the point is, we're looking at the same stuff. And here is ANY, okay? So ANY, you can see that, I think this thing was selling for the last few days. What does it do today? There is a massive shift in sentiment right through here. where the 200-day now is a support level, and you've got the MACD, which is now a support level as well. We get that rip to the upside, that sharp pullback right through there. What pattern is this? Well, it's a flag, okay? That's the price action pattern. The holistic pattern is the bull flag with the VWAP, with the 200-day simple moving average, and then momentum moving to the upside. Now, for me personally, if I don't have a buy signal on the MAC, for me, it lowers the probability a bit, but not entirely. It's something for me to look at. What happens here on the volume? Demand, demand, demand. What does it equate to? Higher prices. Where does this go? I can assure you that if we put up our profit target taking tool like so, we're probably moving into a high probability area. Okay, so just under the 100, well, right at the 100, more or less. Okay. Is this making total sense? Now I'm going to show you what I do specifically. I'm going to go over into my day trading screen here, and I'm going to show you that for me personally, I run the option scan, and I'm predominantly shorting. And you can see right through here that these are the 4 trades that I was looking at. HUT was a trade that didn't work out, no problem. BLI was something that worked out in a big way. These were $2.95 puts that I bought that at one point I think were up almost to $6. Incredible. FCell, this thing was up a little bit, came back into the range, didn't really play out the way that I had hoped. But again, big trade here, nothing happening here, roughly break even here. DNMR, you can see this had a $17 crack right through here. My price action pattern was on here, and this thing dumped 3 points to the downside. And this is what I do every single day. I focus on shorting. But this is everything that you honestly need to get started, guys. There is nothing here that is rocket science. It's about scanning, stock picking, a high probability pattern. And again, I can't stress this enough about the patterns. There's a difference between a price action pattern and a price action pattern that has high probability, high velocity indicators that are included in the pattern, i.e. the 200, the VWAP, the MAC buy signal, and then the uptick in volume. And then the execution, where are you getting in? Using the Fibonacci projection tool to give you some ideas as to where price action is going to run to. And this is what a lot of our traders do. So I've just broken this down for you in about 45 minutes flat, because I really want you to understand that the core components to trading, and this should not be overcomplicated, is scanning, stock picking, patterns, execution. And on the execution side, guys, it is so important that you have your entire trade developed before you get in. What does that mean? It means that you know where you're getting in, where your stop loss is, most importantly, and where your profit target is. And the profit target is second to the stop loss. This is a game of how much money we can lose if we don't cover our ass. So you will see that in the trader rehab clinic that I'm going to send you. And if you decide to look at any of our other pieces of material, I am risk adverse. And so what that means is every single position I get into, every single play I look at, every opportunity, the first question is, where's the risk? And it starts with the pattern, the overall trend. Are things working, excuse me, and setting up in my favor? Where's the risk? And if I think that I've done my entire, if I've gone through my entire due diligence process on the risk side, then I'll put the position on. But the first thing I have to understand when I put the position on is, if this fails right now, how much am I willing to let it fail before I jump out? And there's an old saying, and it's the most important saying in trading: cut your losses quickly, okay? And I can assure you that no modern day trading guru came up with that saying. I'm almost positive that Jesse Livermore, who was a billionaire before the 29 crash, coined a similar phrase. Okay? You have to cut your losses quickly. You cannot let these things bleed against you. If price action is working against you, take the position off and understand that there are like 7,000 other stocks and ETFs and commodities that you can take a swing at. You don't have to sit around and get punched in the face by a stock that's not working in your favor. If you get into a play and it's not working, get out. If your house was on fire, you're going to sit down and turn the television on. It's the same difference. If something's not working, get out, move on. Simple. Scanning, stock picking, patterns, execution. I cannot stress this enough. The biggest part of the execution process is understanding where your risk is if the stock goes against you. If the VWAP cracks on major volume to the downside, pardon me, if a technical level has just given out, get out of the trade. Your brain is going to tell you everything that it needs to tell you to stay in the trade, and it's wrong. I do it to myself still. I've held on to some real bags, some real buttes that I should not have held on to. Some of my most veteran students that make incredible amounts of money a year still have their moments where they're hanging on to bags and they shouldn't. Okay, so I would say that the biggest thing in the world that you can do that will save you and your trading career and your trading account is understanding when a stock is not worthy of your capital anymore. And at that point, it's time to cut the trade, piss off, and understand that there are a lot of other trades out there that are worth your time and capital. I hope you understand that. That is the key. So, like I said, I didn't want to keep you guys too long. Let me ask you this real quick before I put the link in the chat box for you guys. Did any of this make sense, or do I sound like a total crazy person? Either way, I want to know. I know that there are some of my favorite Facebook haters in here, and I really appreciate that they're here. What did you guys think, most importantly? Do you still hate me, or do you see some of the value in what I'm saying? Okay, good. So makes sense. Totally makes sense. Awesome. All of it makes sense. And you are beyond crazy. Okay, well, I know who you are, boss. You're part of the team. So you know just how mental I can get with this stuff. But right, I mean, the fact is that this stuff, it's pretty simple stuff. So I want to ask you all a question. This is going to be different for all of you, but it's going to be the same. So think about what you do professionally. And I'm serious. This also goes for moms and dads that are stay at home, okay? And give me some rope to hang myself with here. But ask yourself this, in your personal profession and what you do, correct me if I'm wrong, but are there not a very high probability sequence of events that you take to make sure that things work the right way? There's a level of efficiency that you have to abide by in your profession, in your career, in your life, physically, mentally, spiritually, etc. Right? There's always a very specific protocol to follow that affords us a high level of efficiency. And the job just won't get done unless you exercise, a certain type of efficiency. Trading is no different. Trading has been made out to be this thing that is, for a small select few, and everybody outside of that circle is doomed to fail. That's not true. It's a hot load of bullshit. Okay? We just need to understand what that high probability situation looks like, and then not overcomplicate it. If the high probability situation fails, cut your losses. If it works out, manage your losses or manage your potential risk profile, more importantly, right? So this is nothing more than understanding efficiencies in your career outside of trading, in your personal life with health, food, religion, spirituality, etc. There is a way that you go about practicing things so that they work for you. Trading's no different. I'm going to give you this stuff. I'm going to put the link up here in a moment. And you will see that, and I go into more detail with this because, again, I know that there are a lot of you are out on the East Coast and it's like tomorrow already. So I appreciate you guys coming through. I really do appreciate your time. But the stuff that I'm going to send you will give you a further breakdown of how this all works. And I can assure you that if you put in some time going over the material a few times, paper trade it, you will see that this is something that you can employ almost immediately. But disclaimer, this is not going to make you rich overnight. That's not what we do. That's not what I talk about. I actually preach the opposite. It's all about the slow money, right? Intraday slow money, 10% here, 15% there, but it all adds up pretty damn quick. Don't jump in head first. Just dip a toe in the water. Get to know the system. Get to know what I'm talking about. Reach out if you have any questions. I think my contact information is in there. So again, this is just a thing that I wanted to give you for absolutely no reason. You know, I peruse the internet and I follow some of my colleagues in this educational / academy space. And there are a lot of great people with a lot of great information that are not doing much by the way of actually helping. And so I want to give you something that's of value, that can help. And if you decide after watching it that you want more, you will have access to get a hold of me and then we can talk about it. Okay. So I'm going to go into the chat box here and I'm going to do this. I think the application's in here. So all I need you to do is, can you guys see what I just put there? There is a link. It says jlewistraining.com/mentoring application. What this is not an application to become a mentoring student. I don't have any more room. I'm not taking on any more mentoring students. That's not what this is. There is a small questionnaire here that will help me understand where you're at in your process. And all I want you to do is fill out that application. Your email has to go with it because what I'm going to do is I'm going to manually go through the application later on tonight. I'm going to reply to it with a link to the, actually what I'm going to do is I'm going to take your email, I'm going to add it and then follow up with you tomorrow to make sure that you got it. So just click that, go through the process. And for anybody that, if this is your first introduction to what we do, if this is your first sort of foray into connecting with us outside of what I do on Facebook and, you know, Instagram and Twitter and all of that, J. Lewis Trading is about 5 years old. Before I started J. Lewis Trading, which is named after me, my name is Julian Lewis, hence the J. Lewis, and I'm trading, J. Lewis Trading. Before this, I was working for one of the top competitors in this space. I'm not going to mention their name, but I was with them for about 2 years. And the one thing that I saw is that this is an ugly ass business where people blow smoke up your ass and upsell the shit out of all of you guys. And it's disgusting. We don't do that. And again, this is not a pitch. I'm not talking about anything that we do in our community. I just want to give you something so that you can sort of understand what we do. And I know that some of you in here already have taken advantage of the masterclass. I know that there are a number of people in here that have actually gone through all of our offers through J. Lewis Trading. And you guys know how we do. It's just kind of come on in, put in the time, put in the effort, and we make things attainable for all. One of the biggest truths about Julian Lewis as a person and J. Lewis Trading is that if you look at the stuff that I'm producing, I'm trying to put out information to help. There's no flashy cars, boats and hoes and all this type of stuff with me. I'm not here to make friends. I'm here to make consistent and profitable traders, and that's it, that's all. So our approach is a little bit different. The people that come through that hang out with us understand things and understand how this model, this system works. So with that being said, that's going to be my exit here, guys. I really appreciate your time, especially everybody on the East Coast, because I know it's real late out there, about 3 hours ahead of me. Yeah, I really appreciate you guys coming through. If you have any questions, fire them off right now. If not, we're going to get out of here. You're very welcome. It was my pleasure. You're very welcome as well. Hit that link. Get the Trader Rehab Clinic recording. Again, I want to say there's a number of videos in there. I talk about discipline. I've got some videos that I've uploaded from top traders, and there's some motivational stuff in there. There's content, obviously, on what we talked about tonight, but more in-depth, detailed stuff. I want you to have it free. We did the workshop. It was packaged up and sold at one point. But you know, I want to get this out to you guys. I want to give you something that can actually take you to a position where you can make money. And then if you decide that, okay, I'm making money with what I've learned, you'll then start to see the value instantaneously with what we offer on the back end. And again, I can't stress this enough. Not a pitch. There's nothing for sale here. And this application link, I want to know what you got on the questionnaire. I'm not taking any more students on. So with that being said, I'm going to get out of here, guys. This was great. If I talked fast and I blew over a lot of information, that was intentional. And the reason being is I want you to take the detailed stuff that I got in the Trader Rehab course. It talks about the scanning. It talks about stock picking, talks about patterns, talks about execution. I've got a link to get TC2000 set up for you guys at a discounted price so that you can start to plug in the scanning inputs that are also offered, and everything that we talked about tonight. I can assure you, I explain in greater detail and slower in the Trader Rehab. And if there's something that you didn't catch in there, my contact info is in there, julian@jlewistrading.com. And as you know, most of you guys are already in the Facebook group. You can contact me in there or through Messenger. And yeah, if you like this webinar, looks like most of you did, because virtually everybody stayed, which is always a good sign. Let me know. Let me know in Facebook. Share with the world that we had a good time tonight. And let me know what your thoughts are on the Trader Rehab program when you get it. And with that said, to everybody, salute. Thanks so much for coming out. I appreciate it. And I'll see you guys on the flip side. And I'm going to maybe leave this up here for, let's say, 30 more seconds, the link. So if you haven't done that yet, now's a great time to click that. It'll take you to a separate window, and then you can just exit the webinar from there and then look for a personal response from me in the next 24 hours or so. So with that being said, guys, again, a million thanks. Really appreciate your time. I hope some of this was helpful. And I'm very confident that the material you're going to get on the back end of this will also be very helpful. So with that being said, I'm definitely and definitively out of here. Have a great night. Appreciate your time, and we'll see you soon.